Ladies and gentlemen, Tesla stock today did not have a great day. Let's just call it that. And the last couple of days really have not been good for Tesla, although we continue to get good news. Elon Musk suggesting that Tesla could by far exceed the most valuable company in the world, which is currently Nvidia, valued at about 2x, 3x what Tesla's current valuation is. We had the Model Y that just launched with the launch variant, which is over $60,000. That should be very accretive to Tesla's margins. But yet Tesla's stock continues to fall. Oh, not to mention Optimus could be running about 600 units per week by the end of 2025. This is something that a lot of Wall Street has not even incorporated into their Tesla evaluation models, including Dan Ives that has a $550 price target on Tesla, not including Optimus. So why, given all of the good news, is Tesla's stock still declining? Well, if you don't know, I wrote on X today. If you have not followed me on X, I highly recommend that you do so. It's Michael Tyler. It's free 99, costs you nothing to do so, and I keep you informed of what's going on in our markets and, with Tesla every single day. I wrote this post that I think pretty well sums it up. I say I'm shocked Tesla's stock is red today. Seems like the Elon buying TikTok rumor continues to be a black cloud over the stock. Now, I don't think Elon really wants to buy TikTok. If he does get involved in the deal, I think there's going to be multiple people involved in the deal. Larry Ellison, maybe Mark Zuckerberg. There's going to be a couple people in this deal. I don't think it's going to be nearly as bad as what Wall Street's kind of suspecting it could be. If we think about this on an equalizer scale, right? On a pendulum, if you will. You have new Model Y, you have Optimus that could be running 600, again, units by the end of this year. All of the good things recently versus Elon buying TikTok, it may not be nearly as bad as what people are expecting. I think a lot of people have PTSD from the TikTok Twitter acquisition in 2022. But you got to remember at that time, Bloomberg was reporting a 100% chance of a recession. Stocks were already down over 25% on the headline S&P, with a lot of other stocks down 80+% that year. It was a really bad year. Elon's Tesla was slashing prices to boost demand, and auto gross margins were collapsing. So 2022 was an anomaly in and of itself, and you had Elon selling a bunch of Tesla stock, and that caused the stock to drop 70%. I think it's not going to be nearly as bad as what we expect. Even if Elon does buy TikTok, I think the overwhelming positives are a much greater force than Elon potentially selling $10, $20 billion of Tesla stock to buy TikTok. Now, I'm not saying, again, I think that's going to happen, because I don't think that's going to happen. I think there's a 20% chance Elon buys TikTok and an 80% chance he does not. But the fact that Elon has not commented on this, he has not rebuked the rumor, that is making people a little bit nervous. Now, that is its own thing. Tesla reports earnings next week. Before Tesla earnings, you do tend to see a little bit of nervousness, a little bit of volatility, because Tesla is a high beta stock and it's very sensitive to earnings calls. It's not sensitive to the numbers that come out. The numbers that we get reported on Tesla earnings are largely already known. There's one metric that will move the stock a little bit, up or down 2-ish%. That is auto gross margins. Auto gross margins coming in better than expected is good. Auto gross margins coming in lower than expected is clearly bad. Now, the reason I believe Tesla stock will actually start to get back on good footing next week is all of these rumors that we have heard. Remember, I shared the rumor of the Model Y launching in the US yesterday, and it happened. Well, I started sharing that rumor about 48 hours ago, and that was correct. I mean, that happened. The Optimus rumor, I think that is probably going to be confirmed on the earnings call. And that's something we haven't even really begun to appreciate yet. It's not even being modeled in Wall Street models. So I think that is a big upside catalyst to Tesla earnings next week. When that's confirmed, I would be shocked if Tesla stock is not up 10, 15% on the earnings call. Now, we also have expectations that FSD will enter the Chinese market soon. After all, Tesla has just started a free trial of advanced autopilot and ASS services in China. I think this is largely overlooked as well. I crunched some numbers on this, and that could instantly add about $2 billion of profitability to Tesla, which is over 60 cents per share. Times that by 120 times PE multiple, and that could add $70 of value to Tesla stock. That's something I think is largely being overlooked right now, not even in the thought conversation. FSD, according to Tesla, will launch in the first half of 2025. This has already, been projected by Tesla on Tesla's last earnings call and in the month of December. In December, Tesla put out their objectives for FSD over the next 12 months, and that was on there. Also, FSD to launch in Europe, which could be material for Tesla's business. So Optimus launching by the end of this year with a run rate of 30,000 per year, about 600 per week, is an upside catalyst to Tesla stock next week when it's confirmed on Tesla's earnings call, which I imagine it's going to. FSD is likely to be confirmed heading into the Chinese market next week. That is a big catalyst. Both of these things really are not priced in or really expected in Tesla stock. Next up, we will have, I believe, confirmation that the robotaxi network is still launching this year. That is going to be a massive confirmation. We need that confirmation in order for Tesla stock to continue to do well. If Elon throws any doubt whatsoever on the robotaxi when it's going to launch, that will be a problem. I think we will get a confirmation of that. That's going to be a big positive for Tesla stock. And really, last but not least, the lower priced Teslas, the Model 2, if you will, is expected to still launch in the coming months. And that is what a lot of your typical Wall Street guys are bullish on. A lot of the other things we're talking about here are really not even in the conversation yet. But lower priced Tesla vehicles, the guidance that Elon gave of 20 to 30% delivery growth in 2025 is what most people on Wall Street are bullish on. I just think they're overlooking a lot of the other positive things. And granted, a lot of Wall Street guys that even cover Tesla, like Adam Jonas, for an example, is probably not as up to speed as I am or as you are if you are a viewer of this channel. Let's face it. I mean, Adam Jonas and other, auto analysts do a good job for their auto clients, right? People that are investing in Tesla, they do like the bare minimum. What we do here on this channel is actually forecast what's coming. And we are far ahead of where Wall Street is. So that's why I'm shocked. Because I sit here and I say, with all of these positive things that are coming, that are likely to be confirmed on next week's earnings call, I'm shocked that Tesla's stock is red today. I'm shocked that it feels like nobody on Wall Street understands this. And, well, they don't. That's the fact of the matter. They don't until they hear it on the earnings call. Then they're going to say, oh my gosh, Optimus by the end of this year, FSD in China and Europe soon, lower price Tesla still coming, robotaxi network still coming this year. And that makes me very bullish for next week. Now, there's going to be a lot of economic data as well next week. There's going to be a Fed meeting. And I think I really have a question of, how does the Fed take this recent pressure by Trump saying the Fed needs to immediately start cutting rates? How does the Fed take that? Does the Fed kind of cave to that like they did in 2019? and cut rates, and we then seen a 20% rally in the S&P in just a couple of months? Or does Powell really fight that? Does he push back on that? Is he a little bit more bearish than we think? I think that will be important for the markets and specifically for interest rate sensitive names. Now, coming next week on Monday, Chicago Fed National Activity Index, new home sales for December, month over month, and Dallas Fed Manufacturing will be on Monday. On Tuesday, durable goods orders month over month, S&P Case-Shiller home price year over year, CB consumer confidence, Richmond Fed data, Dallas Fed service data, some other things. On Wednesday, we will get the goods trades balance and the Fed interest rate decision at 2 p.m. and then the conference at 2:30 p.m. And you bet your ass this is going to be the most important Powell conference that we have seen in a long time because of all of the things happening in government right now, all of the changes that are being made. I mean, look at the Doge clock. Okay, this is an accurate clock of the money that's being saved. Okay, from Doge, $15.64 billion have been saved to government spending in 4 days. 4 days. Okay, that's incredible. Now, how does this work into the Fed's calculus? Okay, because government spending is really where inflation comes from. So does that make the Fed a little bit less hawkish, more willing to entertain cutting rates? Look at the data that we just shared yesterday here on this channel. For the first time since Q2 of 2010, rent prices are now negative on a year-over-year basis. That pretty much never happens. They are plummeting. The dollar is now starting to fall. There are some very positive things happening on the front of inflation. Does the Fed cave to that? Does the Fed acknowledge that? Or does the Fed give us the same old, same old? I think that's going to be very important coming next Wednesday. On Thursday, GDP growth rate quarter over quarter advanced data for Q4, GDP price index quarter over quarter advanced data for Q4, initial jobless claims, real consumer spending, pending home sales, as well as the Fed's balance sheet will be coming out tomorrow or on Thursday, January 30th. On Friday, core PCE month over month, personal income month over month, and personal spending month over month, as well as a speech from Fed Bowman and Chicago PMIs. So next week is going to be extremely exciting or extremely scary. If you're short, I believe it's going to be extremely scary. I think overall it's going to be good though. There's no reason to question, I think, the bull thesis right now. Like, if you are a bear, I really have a hard time understanding the bear argument. There's no signs inflation is coming back. There's no signs the economy is collapsing. I mean, without one of those two things happening, how are you a bear? Just doesn't make a whole lot of sense to me. Now, coming next week, we will also get a lot of earnings. Monday, pre-market, SoFi, AT&T, Bank of Martin, and others. Monday, Nucor, Berkeley. Tuesday, pre-market, Boeing, GM, Lockheed Martin, Royal Caribbean, RTX, JetBlue, Kimberly-Clark. Tuesday, Starbucks, SAP, Logitech, and Stride, Chubb, and F5. Wednesday, ASML, Progressive, T-Mobile, ADP, Teva, General Dynamics, and NASDAQ. Wednesday and after hours, Tesla, Meta, Microsoft, IBM, Lam Research, ServiceNow, Wolfspeed, and Western Digital. Thursday, UPS, MasterCard, Dow, Blackstone Group, Nokia, Southwest, Caterpillar, Comcast, and Mobileye, Thursday morning. Thursday and after hours, Apple, Intel, Visa, KLA, CN, Atlassian, Baker Hughes, Deckers Brands, and United States Steel. Friday, ExxonMobil, Chevron, AbbVie, Colgate, Phillips 66, Charter, and some others. So far, what we've gotten out of earnings season has been better than expected. I don't see there being some disaster next week with earnings. Okay, Q4 looks better than expected. Now, question really is, what does the guidance look like for 2025? And I think that's also going to be a bright spot for markets and boost some confidence. So then I find myself coming back to the argument of, why is Tesla stock not doing better right now? And again, not to rehash everything we talked about here in this video, I don't think there's really a strong bear case on Tesla either. I think we've swung from being very optimistic, a lot of good things priced into Tesla in the 480s. Now, as Tesla is $406 per share, I can confidently say we're probably putting too much emphasis on Elon buying TikTok and not paying not enough thought to some of the recent new developments. I mean, just in the last couple of days, Optimus, 600 units produced per week by the end of this year. At least that is the rumor that I'm sure will be confirmed. Wall Street, they don't care about that. The launch of the Model Y, the best-selling vehicle in the world, just got better and just got more expensive. Should be good for Tesla margins. Does Wall Street care? No, they're not even paying attention. Also, when you consider the fear and greed index over on CNN is neutral at 48. So you're nowhere close to overextended here. Percent of stocks trading above their 50-day moving average at about 50%, meaning 50% of stocks are still in a decline. And we just came off of the lowest bull percentage on the AAII Investor Sentiment Survey in years. There's likely a lot more room for some optimism to grow in markets, specifically in AI stocks, more specifically AI appliers. NVIDIA, sure, that's going to do well. TSMC, that's going to do well. AMD, that's going to do well. But the stocks that are going to do the best in 2025, I believe, are the AI appliers. They are the AI software names, like Tesla. Tesla is going to be a top performer this year. And so far, you wouldn't necessarily think that. But I do think something is about to flip next week. After Tesla's earnings call, I think it's going to be very positive for Tesla and bring with it a whole new round of excitement to be a Tesla stock investor, especially if Jerome Powell kind of caves a bit to Trump, which could happen. I mean, again, consider the data that we've gotten recently has been very good. I mean, rents declining on a year-over-year basis for the first time since Q2 2010. That's a pretty solid sign that shelter inflation is all but going away. Tariffs do not seem to be nearly as large as we thought they were going to be before the election. That's very positive. For the Fed that kind of flipped and changed their stance from September 18th, saying, hey, we're not going to, prejudge what Trump's policies are going to be, to fast forward to December 18th, and the Fed's like, oh yeah, we may not be cutting rates at all next year, or very little because of Trump tariffs. And now look, hey, there's no tariffs yet. We don't even know if countries are going to be tariffed. So does that cause the Fed to kind of rework their language and be a little bit more bullish? Maybe. And maybe that could drive down 10-year treasury yields. Maybe that could bring a more risk-on appetite to our markets. Small caps and AI appliers that will excel. That is my expectation coming next week. And honestly, there's not a whole lot to go against that right now. There's not a strong bear case. There's really not a bear case at all, unless you believe the economy is about to plummet or you think inflation is going to skyrocket. None of those look like they're happening at all, not even in the slightest bit. Unless you think earnings are going to come in really bad, which companies reporting so far have been really good. I mean, there's not a strong bear case at all right now. So Tesla, I think the days of declining, in the low 400s are probably coming to an end here pretty soon. And after Tesla's earnings call next week, after the Fed, I do think Tesla could soon be above $500 per share. By spring, we could be a $600 stock. That's just my expectation. As long as all of these things I've laid out here in this video are met, there's a lot of room for Tesla to run here. And the more we sell off heading into Tesla earnings, the better the risk reward setup becomes after or into and after Tesla earnings. So I'm encouraged from that perspective. I just wanted to set the record straight here in this video, what's going on with Tesla, why I'm not concerned at all. And yes, for anyone that was wondering, now is a great time to buy the dip in Tesla, I think. Could the stock go low? Of course. Lower? Of course. But I think the stock could go a lot higher as well. So let me know what you guys think about this information down below in the comment section. Have a fantastic rest of your day, and I will see you in the next one.